Okay, we are going to be looking at Chester Company and years 3 and 4, analyzing the strengths, weaknesses, opportunities, threats, also looking at their product development, their goals, and then kind of a glance at each product that they offer. Okay, so Chester Company's goals for the whole simulation and running their company. First off, we started out in year 1. Our plan was to take on the debt to fund the products and all our investments. We wanted to make sure we had enough automation. We wanted to make sure we had enough capacity. And we wanted to make sure that we had the products that we wanted to present to our customers to be able to up our market share. That was our goal from the start. Another goal that we had was to increase the promotional budget and the sales accessibility to attract customers. And in that, we would gain more market share. That was a goal we had from the beginning. We wanted to make sure to stay up on our promo budgets and our sales budgets so that we could make sure that our customer awareness was high and that we could sell our products. Also, we knew from the very beginning we wanted to create a new high-end segment product. We knew that they wanted new products. That was one of their most wanted things was the age. They wanted the age to be 0. So therefore, we decided that we wanted to create a new product for that because we knew that the age would be new and they would be attracted to it. We actually introduced a new product. We're going to be releasing it in year 5. We'll be producing it and it'll be on the market. So that's exciting. And now for the future goals that we have, we would like to keep on increasing automation. Also, we're going to be increasing the training and the training hours that we're giving to our capacity. This decreases turnover and gives us a better balance, a better scorecard balance. Also, decreasing leverage. Also, we would like to increase stock value. And then we would also like to introduce additional lines, which we decided to do this year. We're starting new products so that we can introduce them to the market to stay ahead, especially in that high end and the performance segment. They both like lower aged products. Therefore, we are trying to target those markets with these new products.
Chester has an average market share of 13.5% across the total market. The highest it has recorded has been 19.9%. Chester is hoping that to see continued growth throughout the next existing rounds in the simulation, and we are very confident in doing so by just attracting additional customers as mentioned in our previous goal.
Currently, we are looking at product development for the Chester team. This is Amber Musser, head of production, speaking. Essentially, in the next couple of years, there are a few new products that we have developed to be released in the high-end and performance market. Those products are Crush, which was developed for the high-end niche, and Cape, which was developed for the performance segment. Developing these new products allows Sid to shift toward a traditional market, and that allows Cake to shift toward our low-end market and become part of the Cedar high-end selling empire for our low-end development.
Cake is our traditional market segment product. It has an average market share of 13% and a total of sales reaching 3,263. And we are seeing continued growth throughout each round. Cake is slowly transitioning from being in the traditional segment to the lower end segment. We are doing that to cut costs in the development of new products for lower end segments, and as we usher in new products into the traditional segment. Cedar is the low-end market segment product. It has an average market share of 14.7% and total sales so far reaching 4,916. It is arguably the best seller at the moment. As it gets older, it is ideal for that segment because the lower end market is right now requesting an age around 7 years. So we are continuing to see a lot of growth with that product as it hits that maturity age. Sid is our high-end market segment product. It has an average market share of 13.3% and a total sales of 1,329. Sid is our highest priced product at the moment, because the higher end market requires a larger performance and a smaller size, which makes it a little more costly to produce, but we think that it is priced very competitively. Coat is the product in the performance market segment. It has an average market share of 16.7%, which is the highest average market share across all of our current products, with a total in sales of 1,403. Cure is the product in the size market segment with an average market share of 13% and total sales of 1,016. The size market is definitely a little bit harder to compete with, as customers are always wanting a smaller and smaller size product, yet we have to be vigilant in the way that we price the product to make it marketable and gain that market share.
Hello, my name is Joshua Ojo, Head of Research and Development for Chester Company, and I'll be introducing to you guys today another one of our high-end products in Crush. If we go and compare Crush to our other high-end product, Sid, Crush has a higher average market share and is obviously doing better in total sales. It also has currently a performance of 9.3 and a size of 10.7.
CAPE is another product that is due to be released in round 5. CAPE will fit into the performance segment, which will appeal to a more diversified offering of clients rather than just sticking with high-end products. We'd like to market to performance purchasers, as well, because they appreciate younger designs and more sleek sizes. Automation and capacity have already been purchased to meet the demand for this product. And introducing a new product will allow Team Chester to remain competitive with the other firms in the simulations who have adopted similar strategies.
Some strengths for Chester include our new product offerings. We are continually growing in our product developments, product lines, and we have recently developed the Crush product as well as the Cape product. We are also making sure all of our products are competitively priced, and we are keeping those below the range that the customers are saying is their maximum. And then for our lower end products, we are keeping them towards the lower end of what customers are wanting to pay. Chester has also developed a really great sense of leadership and also community within our group. We're working together very well, and we are also maintaining that everyone has a certain thing that they are responsible for and that they are living up to those responsibilities. Going back more into the products, we do have new products on the horizon that we are wanting to push, but we are keeping those a surprise until they are officially announced in later rounds. We are also doing a constant increase in promotion and sales budget, because without promotion, how are customers going to know that a product is available? And without a sales budget, they won't have the accessibility that they need to get to those products. We are also slowly transitioning some of our products into other segments. We are moving Cake, which is a traditional product, or what it started out as initially, more into a lower end, as well as we are pushing Sid from our high end more into a traditional end to make room for the new product Crush. Some of the weaknesses that Chester has seen throughout the years would be the misalignment in capacity and product launch. There were a few times that some of our products were not properly managed from a production standpoint or a marketing forecast standpoint, which meant we didn't produce the correct number and inevitably sold out. Another thing that could be viewed as a weakness would be the gaining of debt that we went through to really get back into the company, like with investing in automation and developing new products. And we were a little slower to move with new products in our market. We would love to be able to produce a product and also be able to sell it within the same year, but our turnaround rate just isn't that high. And what is somewhat of a weakness would be the investment that we made in our marketing department as far as promotions and sales accessibility goes for items that were not yet available for purchase.
Opportunities for Team Chester involved the potential of offering dividends in the future to investors. This would come in later rounds as investor incentives. Opportunity for more revenue through development of new products and continued growth in the market, in our market share. We've discussed the potential opportunity of retiring our weakest product to reuse that capacity for a newer product, continuing to connect with our customer base through strong marketing endeavors, and countering the need for debt, which we have found to be preferential in years 1 through 4, countering that need by increasing revenue. Further connection in the market and growth for the firm, and momentum toward building from the second place position into a top position in the simulation.
Here are the threats for Chester Company. We could potentially have a less competitive advantage than our competitors because of late launches. Potential difficulty in gaining extra market share because of late launches. Financial overextension. Higher employee turnover. Right now we're sitting at 10%, which is the highest out of all the other companies.